Okay, so in this next video, just to kind of piggyback from what we learned about candlesticks, we're going to talk about price action now. So, what exactly is the price action? On Investopedia.com, it says price action is the movement of a security's price plotted over time. Price action forms the basis for all technical analysis of a stock, commodity, or other asset chart. Many short term traders rely exclusively on price action and the formation of trends extrapolated from it to make trading decisions. Technical analysis as a practice is a derivative of price action since it uses past prices and calculations that can then be used to inform trading decisions. So, like we learned about candlesticks, each candlestick is represented by a time frame. So, one candle in this time frame is on an hour, so each candle is 1 hour. And when those candles are all pushed together, they orchestrate or build what's the price action. So the price action is just all the candles combined showing you where the price moves over a certain period of time. So you'll know, just like we learned before about how the candle opens and closes, these candles all show a structure of where the price is. So in the previous video, knowing how when we zoom in, we can see the open, high, the low, and the close of the candle. You can also see that information up here in the top left corner, right next to the time frames. So you'll see OHLC. That stands for open price, high price, low price, and the close price. Now, if you'll notice this little crosshair section here, that helps you pinpoint where you're looking at so you can see specifically. You'll notice how the open, high, low, close price here, it changes as you scroll over different candles because it shows for that specific candle that piece of information. So within that, now that you know how open, high, low, close works, with the price action shows you everything you really need to see. This is what the foundation of technical analysis is around, is the price action is essentially just your source of information, and you base your trading off of what the price action is doing. So the price action combined with indicators like these, you have volume, the RSI. We're going to talk in depth on each individual indicator, but knowing how the price action moves and knowing how those market cycles take place, we'll talk about putting the market cycles on this price action. We can make a good estimation when a good time to buy and sell is by using these additional indicators to help validate or give us a stronger support as to what the price might do. So we'll talk about those indicators later, but just wanted to build that into how the price action works. Now, to cover back to market cycles again, I'm going to hit this a few times. A lot of this stuff I'm going to say is going to be super redundant. I just want to make sure that the important things are hit on a lot because you don't want to skip and you don't want to form bad habits and forget to include these things. But going back to the phases of a market cycle, there's 4 of them, like we learned in the first video. So, and those market cycles are on all time frames. So market cycles on a daily time frame, those are different from the market cycles on a 1-hour time frame. Like we learned before, time frame doesn't matter. It's still the same chart. You're just getting a more detailed view, but you can see those market cycles. So if you're a day trader, you're probably looking at the 1 to 4 hour time frame because you're putting in money and you're taking it out very quickly. So you want to pay attention to these smaller patterns in the price action. But maybe you work a 40-hour week and you have 5 kids and you don't know what to do, to at least invest. So you want to trade maybe on the daily or even the weekly time frame. When you do that, you can also see these market cycles too as well and get a bigger picture. So let's just find those market cycles again. So hopefully you've studied them, you understand them. You need to really understand all 4 phases because it's going to make a huge difference in your success. So we'll just pull up a random section. The market cycles are the same over and over again. They repeat themselves every single time. Just like the changes of a tide, the market cycles are cyclical every single day. So on this daily time frame, we'll look at here. So the first phase is the accumulation phase right here. We see the price action is not moving much. This is where smart money's buying in. Then we have the markup phase. This is when retail investors and people are starting to see the prices getting stronger, so people start buying, and then the people who are smart back here start selling, which is why you see these little dips in the price where there's red candles, because people are selling, taking profits. After we hit the markup phase, then we have the distribution phase again. Distributions where the price goes sideways, it's not really going up, there's more sellers, and then finally we hit that markdown phase, and that's when everyone's just getting wrecked who got in on the top, and the smart people have already been out. So this is for those people that got late to the party, and they're just taking their losses now. And then you'll see again, we zoom in, you'll see another market cycle start from the very beginning: accumulation, markup, distribution, markdown. Sometimes the markdown phases are longer, sometimes they're shorter. It all depends, but just understand those 4 phases and how to incorporate those into your charts. And the reason that's significant again is if you're smart and you have a good trading strategy built, your trading strategy is gonna change from person to person. A lot of people will buy an old dollar cost average. That's where they buy dips of the price, so that way when the price goes up, they make their money over periods of time. I personally, I like to make money in the middle. When I get a confirmation that the trend is going to change and we're going to be up into the markup phase, I like to take my profits right here in the middle. I'll start buying maybe somewhere in this range, and then I'll start selling maybe somewhere in here. I don't really care about hitting the top or the bottom. That's totally unimportant. The most important thing in trading, don't lose money. I don't care what anyone tells you, don't lose money. Treat every dollar like it's your last, because when you get sloppy with this and you let your emotions get involved, that's how people end up having massive failures, and then they get themselves in trouble. So just always remember, build a trading strategy that involves you not losing money. You want to treat every dollar like it's your last. But that's how the price action works. In the next few videos, we're going to talk about indicators and things like that, and we'll dive more into how to build your charts and everything. But that's price action for now.